Welcome, landlords and property investors. One of the most fundamental parts of being a successful property investor is buying the right type of property. There's a range of different factors to consider when deciding to invest in either a house or a flat. So, in this video, I'm going to break that down and tell you exactly what you should buy and what I've bought over the last 5 years as a property investor myself. My name's Phil from Let Property, and we help thousands of landlords every year to buy and sell their investment properties through our specialist tenanted property investment platform. I've personally grown my property portfolio to a multi-seven-figure value, and I'm here today to help investors just like you to get on the path of becoming a successful, hands-off property investor too. When we're investing in property, there are two ways we make money. Number one is the cash flow that the property generates, known as the rental yield. Number two is the capital growth, which is the long-term increase or decrease of the property's value. As property investors, we're looking to buy properties that either hold or grow their value over a long term, as well as producing income during the time we own them, whether that's short or long term. Now, one of the biggest factors that determines capital growth and the value of a property is the rarity of the asset. Basic economic principles tell us that when the supply of something is low, the demand often becomes high, which pushes up prices. So, as property investors, properties that have high potential to grow in value are the ones considered to be rare in the area that they're situated in. The biggest factor to achieve capital growth. Understanding this concept, whether you're buying a house or a flat, means we really need to take a deep look into the area that we're buying in to figure out how rare that type of property is in that location. We also need to take a deep look into the demographics of the people who would live in that type of property. The person renting a flat is going to be very different to a person renting a house. For example, if we look at big city centres like Glasgow, Manchester or London, we see a high concentration of flats. That means there's a low concentration of houses, and houses compared to flats in city centres are going to see much bigger price increases over the longer term. If someone comes into that area looking for a house, they won't find very many, which means the price of houses in that area will tend to go up. The other part we need to think about is the demographics. What property types are people actually looking to buy or rent in a city centre? Fewer people are looking to buy a house in a city centre compared to the countryside. In the countryside, it's likely to be families who usually want space, a garden, freedom. In a city centre, it's more likely to be professionals, not large families. So demand for property types in a city will be very different to that in a countryside. Houses across the UK, on average, will generally increase in capital growth more than flats will. So, if you're looking for long-term growth in your asset, most savvy investors will buy houses and hold on to them in their portfolio because that is where they can see a significant increase in their capital growth. This doesn't mean that flats won't grow in value. I own many flats that have grown very, very well. However, if you're investing in an area flooded with flats, you're likely to see slower capital growth or possibly none at all because there's too much supply of that type of asset. What should you do as an investor? What type of properties should you be looking to buy? How can you do the research to establish what you're looking for in different areas? Very simple. You can start by looking at what's on the market right now. My advice is to look at the first or second page of Rightmove, Zoopla, or any property website and check out what's for sale in that area that you're interested in. What are landlords selling? What are residential sellers putting on the market? That will give you a picture of what the area is really like. For example, in a city like Manchester, you can break it down into different suburbs. Some areas are very residential and family-focused, near schools and family amenities. Other parts of Manchester are geared towards professionals, and in those areas, you'll see a lot more flats and maybe even higher-end flats. What you need to do is to figure out what's going on in each area and understand who the demographic is that's living there. From there, think about the asset, whether it's a house or a flat, and which one will have a high demand in that area. Developers do this all the time. They focus on providing a unique and rare option for the right demographic. The biggest mistake that developers make is creating the wrong type of property for the wrong area. As an investor, you want to make sure you're not buying something that's oversupplied. You don't want to go into an area that's struggling to either rent or sell properties. Instead, aim for areas that already have high demand and, if possible, buy a type or size of property that's in short supply. That way, you're holding onto a unique asset that's more likely to grow over the long term. Personally, I have a mix of both capital growth and rental yield focused properties in my portfolio. Some of my properties are unique and might even have a lower rental yield, but I know that they'll grow in value over time. Other properties I have provide a high rental yield, but there are many similar properties in that area, so I bought them purely for cash flow. For me, my portfolio is about finding a balance between capital growth and rental yield. You should consider your own short and long-term goals to decide what types of properties are right for your portfolio. In general, the real magic of property investing happens when you find something that has a great rental yield and a unique, rare element, ideal for capital growth. That's where you, as an investor, can really gain the edge by understanding the type of properties you should be buying in each area. If you found this video useful, check out my recent video where I talk about the best geographical areas to invest in property. Click the link here to watch.